So under this information, we need to first of all find out. You have to take down the information which was given in the problem first. Whenever you see a problem, first you take down that information, what it is given. So I am taking down here given information. In case of purchase option, what is the information that was given here? Asset of asset cost, it is given 50,000 rupees. Life of the asset is 4 years. Depreciation, it is 15% on straight line method. And one condition is given that this depreciation is calculated on half of the purchase. Half of the purchase means half of the cost of asset will be taken for calculating the depreciation. Okay. And tax, it is 30%. And in case of lease option, the information is given as annual rent 15,000. And lease period we will take equal to the purchase option amount. So this is, it may be given or may not be given in the problem, but you take it as equal to the purchase option. How many years are there? Lease option also you apply for those period. And we need to derive from this information what is the firm's revenue per year that you have to calculate, and how much interest they are going to pay for per year, that we need to calculate, and what is the cost of capital, that is also not given in the problem. So all these three informations we have to derive, and then we have to apply calculating the NPV. Without these information, you cannot calculate the NPV. So for that, first of all, we have to calculate this information. What is the revenue of the firm per year, and what is the interest that they are going to pay per year, and the cost of capital that should be paid. Okay. So now let us calculate first of all what is the interest and the principal amount that should be paid. I am inserting here one table. Let us take a slide. Insert the table format. So we need to calculate what is the installment amount that we need to calculate first. Per year, how much installment they are going to pay. From that installment, we can derive what is the principal amount and the interest. Okay, 4 years we have now. So for 4 years, you take columns. Keep here computation of interest and principal amount. So to calculate this, first of all, we have to find out the annual installment, how much they are going to pay. Because here in the problem, it is given that the the asset can be purchased for rupees 50,000, for which funds can be raised by the issue of 12% loan, which is to be paid together with interest. Together with interest means along with the principal amount, some interest they are going to add, and that will be paid. Okay, so this payment will be done equally in 4 years. So within 4 installments, the purchaser is going to pay back the amount. Okay, so that means here, first of all, together how much they are going to pay. That amount we are going to calculate first. So for that, from this information, we are going to calculate how much it is going to be paid annually. So calculation of installment for 1 year, that you need to calculate first. So for this, let us take what is the information. Borrowed amount is how much? How much they will borrow? Whatever the amount that they are going to pay for the purchasing amount, purchasing the asset, 50,000. No, asset cost is 50,000. No, so 50,000 they are going to borrow. ఎందుకు బారో అంటున్నాం అంటే ఇక్కడ చూడండి 50,000 రూపీస్ అని అన్న తర్వాత ఫర్ విచ్ ఫండ్స్ కెన్ 50,000 they have raised from outside. ఏమైంది దీనికి ఆన్సర్ రావట్లే. So we will treat it as what? 50,000 is borrowed. The borrowed amount is equal to 50,000 rupees. And interest rate is equal to 12%. So this is already given. Okay. So now you need to find out what is the present value of annuity. Present value of annuity for life period of asset. How you are going to calculate this annuity value? So present value of annuity means you are going to take the present value of Rupee for first year plus second year plus third year plus fourth year. Only 4 years, no? 4 years, no? Life period, 4 years. So up to there, you are going to calculate the present values and you add the values. Life of asset is equal to 4 years. Okay. So how much it is you are going to get the present value that you calculate in this calci. So R value you take as a interest rate, you treat it as R value. Okay. So to calculate the present value of Rupee, 1 divided by 1 plus R whole power n. That formula you calculate. For first year, how much it will be? 1 divided by 1 plus 0.12, no? So 1.12 it will be. 1 divided by 1.12. Take like this. Okay, so first year value is how much? Your value ఎంత వచ్చింది 0.893. Okay, 0.893 plus second year key, you press the equal to symbol, you will get the second year value 0.797. Take those values here, 0.797. And third year the value is 0.712. 0.712 plus 0.3636. 0.636. So sum up all these values, how much you will get, that you see. 0.636 plus 0.712 plus 0.797 plus 0.893 equal to 3.0375. Okay, 3.0375. So this is the annuity value you got. Okay, so now you can calculate the installment. Installment amount is equal to borrowed amount divided by present value of annuity for 4 years. Okay, so that is equal to how much you are getting, equal to 50,000 is the borrowed amount divided by 3.0375 is the annuity value. You divide that 50,000 divided by 50,000 divided by 3.037. I am taking 75 తీసుకున్నా 7 తీసుకున్నా. Okay, so the amount is how much you are getting, 50,000 divided by 3.037 discount, so that you will get the round figure. Okay, so that is equal to, you got rupees 16,000 for 6, okay, 463.6 వచ్చింది కదా. So you take it as what, 464 round figure you take. Okay, 3.6 or 16,464. So this amount you take it as the installment amount. So now we got this amount, that for each installment how much they are going to pay. So from this we have to derive the, you have to separate how much it is related with interest and how much it is related with the principal amount. Okay, so let us take this calculation first. So let us take year, first column, and installment we know, and we, from this we are separating interest value and the principal value. After paying this, how much it is balance at the end of each year, that we are going to pay balance. So let us take in 0 year, there is no installment, no interest, no principal amount. That means here in 0 year we are taking as the investment of 50,000. When you come to the first year, how much you are going to pay? 16,464. This is the installment amount. No? Every year this is repeated. There is no change in this 16,464. 16,464. And fourth year also you are going to pay 16,464. So now we need to find out how much you are going to pay as an interest. So first year 50,000 into what is the interest rate? 12%. No. So how much you are going to pay as interest? Let us calculate here. 50,000 into 12% will give you 6,000. 6,000 is the interest that you are going to pay here. So 6,000. Among the installment amount, 6,000 is related with the interest value. So 16,464 minus 6,000 will give you the balance of 10,464. That remaining amount is nothing but the principal amount. Okay. So this principal amount you deduct from the 50,000. How much you will get? That is the remaining amount that you need to pay the interest. So 50,000 minus we have paid 10,464 principal amount now. So that we have deducted from the main balance. So the remaining amount that is related with the main balance on which the interest is paid is 39,536. 39,536. On this you need to pay the interest. So how much you are going to pay? 12% now into 12% you calculate. So the interest amount will be 4,744. 4,744 is the interest. So now deduct this 4,744 on from 16,000. 16,464 minus 4,744. You will get the principal amount. That is this. 16,464 minus 4,744 is the interest. So 11,000 you have paid for principal amount. 11,720. So this 11,720 you deduct from 39,000. 39,536. So you will get 27,816 is the balance on which you need for 29,816 is the balance on which interest is needed to be calculated. 27,816. So on this you calculate again 12% of interest. So the amount interest that you need to pay in the third year is 3,333. Let us say round it to 8. 3,338. So this amount is deducted from 16,464. 16,464 minus 3,338. The remaining amount is 13,000. 13,126. 126. The balance amount will be minus 27,000 816. So your balance amount is 14,980, like 14,690 is the remaining amount on which interest should be paid. On this I am calculating 12 percentage. 1763. Let us take here 1763 is the interest in the fourth installment. So this amount you deduct from this fourth year. The remaining amount is how much? 14,702 is the principal amount. So there ends the calculation of interest and principal amount for 4 installments. Okay. Any doubt in understanding this? Let us name these columns. This is A. Interest let us take as B. B is equal to, I will give you the formula here. C is the principal amount. Let us take this as D. So B is equal to D into 12 percentage we have calculated. Okay. And C, how we are getting this C value? C is equal to A minus B. And how we are getting B value? B is equal to D of previous year, D of n minus 1, D of n minus 1 minus C. Okay. So this is how you are going to get this these values. Ante kada. Any doubt in understanding this? How to compute the interest rate and the principal amount? If you are not going to able to understand this, you cannot go further. Because this is the base point where it is required. You need to find out this. Any doubt in understanding up to here? So that we will go for the next calculations of NPV. Okay, your silent means I feel that you understood everything. So now you need to compute the computation of NPV on purchase option. This insert a table. Let us take the table of 6 columns, 7 columns. So first you always keep the year column name as year. And second column installment payment. Installment. And third column tax shield on interest. How much tax exemption they are getting, that you take it as second column. And depreciation, because this is an asset purchased, you will have depreciation. That was given, depreciation was given on straight line basis 15%. Okay, so 15% of depreciation you can calculate. net cash. You will get this is taken as outflow, and we will calculate the present value of rupee, and based on that present value of cash outflows. So now we know the years, how many years we have. 1, 2, 3, 4 years we have. 4 installments, no? So 4 years you take. For each installment we are paying 16,464. 16,464. This is the amount we are going to pay. So now how much you are getting tax shield on interest, that you need to calculate. So tax is how much? 30% you are paying. No? How much is given in the problem? 30%. Okay. So let us take that. Let us calculate on interest how much tax you are exempted. Tax shield on interest equal to interest paid into the percentage of tax. Tax given. So now each year you calculate, you apply the formula and calculate that. So how much in the first year we got interest we have paid, it is 6,000. No? 6,000 into 30%, how much it is? 6,000 into 0.3. Only this one. 6,000 into 0.3 is the tax. So we got 1,800 by calculating this. So 1,800 you are going to pay as the tax shield. 1,800. Second year interest is how much? 4,744. 4,744 on this 30% is 1,423. So 1,423 is the tax shield for second year. 1,423. Next comes third year value. Third year it is 3,338 into 30%, you will get to 1,001 rupee. So that you show in the third year column. 1,001 rupee. And coming to the fourth year, how much we are paying? Interest is 1,763. So on this tax exemption is 528.9. Let us round it up. 502.29. Let us take it at 529. Okay. So now we need to calculate the depreciation. We got the interest shield, you know. So next comes the depreciation. How much depreciation we got here? 50,000 is the cost of capital, no? Cost of project or cost of asset into percentage of depreciation. Percentage of depreciation is given here. How much? It is 15%, no? 15%. The cost of asset is how much? 50,000, no? 50,000 into 15%. How much is 15,000? 50,000 into 50,000 into 15%. sorry, here it is here condition is given, no? How much it is? What is the condition here for second year? Depreciation. So depreciation is paid on straight line basis on half of the purchase amount, right? So that means you are not going to calculate on the 50,000. You are going to calculate on the 25,000, not on the 50,000. So 20, half of the amount of 50 is 25,000. No? So let us take 25,000 into 15 percentage. So 3,750 per year you will be deducting as depreciation per year. So every year, this is straight line basis. So every year you are going to take the same depreciation value. 3,750, 3,750, 3,750. For all the years you take the same value. So now you deduct depreciation and the interest from the installment, you will get net cash outflow. Okay, so that means 16,464 minus 1,800 and 3,750. How much it is? Let us calculate here. 16,000, 16,000, 16,464. 16,464 minus 1,800 and minus 3,700. The remaining amount is 10,914 is the net cash. 914. In the same manner, you calculate for the second year and the third year, you will get the values, remaining values. 11,291 in the second year, 11,713 in the third year, and 12,185 in the fourth year you will get. And now you need to calculate the present value of rupee. So how this is calculated means, first of all, you have to calculate, you have to identify the cost of capital. So cost of capital you can calculate here. Take the formula I into 1 minus P. So where I stands for interest, P stands for tax percentage. So if you apply this, how much you are going to get? Interest rate is here. Interest means not the total amount, interest rate you take. Okay. So interest rate given here is 12% in the problem, and tax it is given as 30%. Substitute here 12 into 1 minus 30%. So when you deduct this, when you derive this, you will get 12% minus 12% into 30%. అర్థమైందా 12% మీద 30% మీరు క్యాల్కులేట్ చేసి డిడక్ట్ చేయండి. ఓకే, 12% మీద 30% అంటే ఎంత వస్తుంది చూడండి. 12 into 30%. 3.6 you will get here. that is equal to 12 minus 3.6 you will get. So is equal to 8.4 will be the cost of capital. That means present value of rupee at 8.4 discount factor you are going to calculate. Okay. So now calculate the rupee values first of all. Use the same formula 1 divided by 1 plus 8.4 means how much it will be? 8.4 divided by 100. And thus 1 divided by 1.084 వస్తుంది అంతే కదా. So is equal to how much it is? This is 1 divided by 1.084 means how much it is? 0.9225 means take it as 0.923. So you press the equal to button. Next year 0.851. Next year you will get 0.785, 0.785, 0.724. These are the rupee values we got. Now multiply with the cash net cash outflow. So that will give you this column values. 10,914 into 0.923 will give you 10,073. In the same manner, you calculate all the values. Second year, you will get 9,609. Third year, 9,195. Fourth year, 8,822. So in this manner, you will get the values. Sum up this column. The total will be 3,768. So this is called as what? Present value of net cash outflow. Okay. In the same manner, you have to calculate for the leasing option also. What is the net cash outflow? So here, how you got? You give the column names here. A tax shield will be the B column. B and depreciation, take it as a C column. Net cash outflow, D column is equal to A minus B plus C. To do that, you will get this. And present value of rupee is let us take it as E column. And the last column is F is equal to D into E. So Now I think you are very clear how you have calculated this. Okay. So this is how you got the values. In the same manner, go for calculating the leasing option. Shall I continue? I will give the column names and how to calculate. You calculate and then find out the final result. Okay. Unnara? Applicate వెళ్ళిపోయారా లీజ్ ఆప్షన్ అని పెట్టుకోండి ఒకటి copy this. Lease option అని మార్చేసి సో ఎవ్రీ ఇయర్ లీజ్ ఆప్షన్ ఎంత వచ్చింది వాల్యూస్ మనకు 15,000 కదా ప్రాబ్లంలో వచ్చింది సో దాట్ యూ టేక్ ఎవ్రీ ఇయర్ 15,000. This is not installment. We'll change this A column name lease rent and పెట్టండి. Lease rent per annum. Tax shield on lease rent. You have to pay lease rent. You have to calculate tax on lease rent. So you remove this column C. Cash outflow. You name this as C column. A minus B you have to pay. No C column. Name this present value of rupee as B. And this is E. E is equal to C into E. You know how you are going to get this tax shield means on this 15,000 you calculate the tax is 30%, no? So calculate 30% on 15,000. 15,000 into 30% means 0.3. 4,500 will be the tax shield on your rent. So you are going to pay 4,500. You are going to get the tax. So now you deduct this 14,500 from this 15,000. The remaining amount will be the 10,500. So every year same amount, no? So same amount you will be getting as the cash outflow. 10,500. The present value of rupees, again you need not calculate what we have calculated for purchasing, that you copy here and multiply with these values. You will get the values 19,692 first year, 8,936 in the second year, 8,420, sorry, 240. The third year, 7,602 in the fourth year. So sum up these values, you will get 44,472 total value. So this will be the total value. Bold it. So now, after getting this, you have to comment on this. Now, can you tell me what is the option that you are going to give, whether it is an purchasing option or lease option you are going to suggest to them? So, present value of cash outflow on purchase option is, you write that option is equal to how much we got here, 37,698. So 37,698. And on lease option, equal to rupees 44,472. So cash outflows here, in both these cases we have taken down. So whichever is, because this is a cash outflow, so which option you are going to suggest them? So whenever we are going to find out the NPV, so whichever is higher, that option we will be selecting. No? So in this case also, the NPV of this option is more than purchase option, hence this option is suggested. So this is how you are going to suggest them. So instead of purchasing the asset, if you go for the lease option, that will be beneficiary to the organization. Is that clear? Is that clear?